Okay, good morning, good afternoon, good evening, depending on when you are seeing this video. So this is a trade breakdown of the trades I took last week. That's the fourth week of March. So I started by allowing my trade to run. Remember, if you could remember, last 2 weeks it was this. I was on this sale. It's a sale. Yeah, this sale. I was in this sale. I took this sale from somewhere here. Yeah, to sell from somewhere here, and my target was this low initially. The price was going to pick out this low, but when I saw that price came here and started reversing, okay, I think yeah, somewhere around here, and price started reversing, I had to take my profit. That was a 1:8. You know, in the market, you don't have to be rigid, right? 1:8 is already much, so I took my profit at 1:8. Then I took another buy here. So what was my reason for this buy? First of all, I went to the daily time frame. Yes, the market is bearish, but there are times when the market can be bullish momentarily, right? Irrespective of the overall trend. So when I saw the price came and mitigated this OCL here, right? I've not mitigated the OCL. I went to the 1 hour time frame to observe the reaction, right? The one thing you should learn is that don't ever predict the market. Just act based on how the market reacted, right? To every action, there's what? There's an equal and opposite reaction. So just act based on based on how the market reacted, okay? So when price basically did that OCL and moved up aggressively, right? That was one. That was one green light for me to prepare for a buy. Then it broke internal structure, and the internal structure sustained. If it has broken and the structure and down like something like this, let me show you what I mean. If it has broken and then came back like this, then and oh, this is not this break, this is sweep, but because it broke, it broke structure and it sustained. It didn't just break and start to come down. See, it broke and it sustained. So this was a clear indication that the buyers were present, right? That's one. Secondly, there's an FVG or imbalance, market created an imbalance, meaning that we still have unfulfilled orders or pending orders in this region, right? So that's usually the second one. Then thirdly, price left an inducement for me, because if you go to the now, most of us don't, most of us we just mention inducement, but we don't really know what it is. What is inducement? Price. It is just basically price enticing traders to take positions that are wrong. Yes, to take wrong positions. If you see what happened here, you know, some persons trade 5 minutes, 15 minutes, although I don't trade the same films, but I use them to understand what the market is doing. Some people will read something like this, super liquidity, very good structure. So, what are they waiting for? For price to come back here and mitigate, understand, and go. And that was correct. Now, people that didn't see this sweep in the market, that's what I would say. And people that didn't see this sweep, right? When they come and see that price has swept liquidity, broken structure, mitigated, and then broken structure, what will they do? They will not be expecting more buys. This is why this is called an inducement, because now the market now is now making them to believe that when price comes to this area, what will happen? It will buy. Are you not seeing why we call it inducement? Good. So when I saw this, I know that okay, good. This market is going to buy. That's why sometimes you move to a lot of people better understand what the market is doing. Right? I think it's good for your analysis. But to better understand, to better read the market, you need to go to the lower time frames, right? So that was why I now put my, I just set my, set it, no, I didn't set the pending buy. What I did was I waited for price to come here because I saw the aggressiveness and the intensity at which price was coming down. So what did I do? I waited for price to come to the level. And when I saw price um, sell up to this level, then I took my, I entered buy, just press buy, but I knew that from this level, at least price should uh, react, right? So I took my buy somewhere around here. I used 10 pips as my stop loss. Yeah, I used 10 pips. My stop loss. Yeah, my tech profit was 1:5. 1:5, yes. I'm wondering, why don't you allow it to run to this point? You know, the market, you can predict it. So this is a level that I'm sure that reaction can happen from. So I just took advantage of that. So price can choose to come here and go down or continue going up. Now I'll tell us why I choose to take profit here. Now when you go to the 5 minutes time frame, right? On the 5 minutes time frame, yeah, you will see that price came here. Oh, sorry, there's another block here, right? Another block here. Now I don't how do I put it? I don't really value lower time frame order block, but what made me to consider this order block as effective was because of this inducement. Yeah, this inducement here. So when I saw this, I said, okay, people now be saying, oh, high, sorry, high. You'll see there's a break of structure, full back, break of structure, or didn't break rather. But if you go lower time frame, you see that it broke. Now they'll be expecting to sell from here. So I know that this zone was going to act as an inducement to this zone, right? And if you watch the price came there, we had a rejection. So that was why I set my take profit to this zone. So my take profit was at this level, and then I entered a sell, believing that market was going to reverse it and pips. I was going to reverse, and my target was, this is the 1 hour time frame. Yeah, my target was this levels here, this low, yeah, this levels, and I tried to take a lot of them out, but price had other plans and it went up, right? So that's the trade breakdown for 4th week of March. Yeah, so bye.